In today's lesson, we will discuss mutual funds. The goal of this lesson will be to apply what we know about multiplication, division, and subtraction to understanding mutual funds. Mutual funds are a type of investment. In a mutual fund, money from multiple investors is pooled together and used to buy a diversified portfolio of different stocks. An investor works with a fund manager and buys shares in a mutual fund. The fund manager buys and sells stocks in different companies. Mutual funds also pay dividends, like stocks do. The cost of buying shares in a mutual fund is determined by the value of the stocks held by that mutual fund. As the stock value increases, the price of a share in the mutual fund increases. Likewise, as stock values decrease, mutual fund shares decrease in value. The value of mutual fund shares is based on the net asset value, or NAV, of all the stocks held by the mutual fund. We can determine net asset value with the following formula. NAV is equal to fund assets minus fund liabilities divided by number of outstanding shares. So let's say Carmen decides to buy mutual funds instead of stocks. She looks at Fakestone Mutual Fund. The fund has combined assets of $100 million and liabilities of $27 million. Fakestone has also issued 14.5 million shares. So what's the NAV? $100 million minus $27 million divided by 14.5 million simplifies to $73 million divided by 14.5 million, which equals 5.03448. So the NAV is $5.03 per share. Mutual funds often profit from fees charged to investors. These are called loads. There are also no-load mutual funds. However, no-load mutual funds can still make a profit through other types of charges. Load funds offer shares with commission included, while no-load funds sell at the NAV. To determine the total cost of investing in a mutual fund, use the following formula. Investment cost is equal to number of shares times price per share. So if Carmen wants to buy 210 shares of Fakestone Mutual Fund and Fakestone is a no-load mutual fund, what is her investment cost? Investment cost equals 210 times $5.03, which equals $1,056.30. So Carmen's investment cost will be $1,056.30. Everyone who invests hopes to make money from their investments. Money made on an investment is called a return on investment. People make returns by selling stocks or mutual funds. To calculate a return, we could use the following formula. Return is equal to sales price per share minus purchase price per share times number of shares. So if Carmen buys 210 shares at $5.03 per share and 5 years later sells all her shares at a rate of $8.45 per share, what is her return on investment? $8.45 minus $5.03 times 210 simplifies to $3.42 times 210, which is equal to $718.20. So her return on investment will be $718.20. So the goal of this lesson was to apply what we know about multiplication, division, and subtraction to understanding mutual funds. Mutual funds are groups of stocks bought and managed by a fund manager. Numerous investors buy into mutual funds, and the manager uses their money to buy and trade stocks. Subtraction and division can be used to calculate net asset value with the formula fund assets minus fund liabilities divided by number of outstanding shares is equal to the net asset value, or NAV. Multiplication can be used to find the total cost of investing in a mutual fund with the formula number of shares times price per share is equal to investment cost. Subtraction and multiplication can be used to calculate returns on investments with the formula sales price per share minus purchase price per share times number of shares equals return. For more information on this topic, contact your teacher.